Okay, so Regulation 34.5, an estate agent shall explain to every prospective party to any written offer or contract negotiated or procured by him in his capacity as an estate agent prior to signature thereof by such party the meaning and the consequences of the material provisions of such offer or contract, or if he is unable to do so, refer such party to a person who can do so. So this is, for example, before a buyer or seller signs a contract, the estate agent must clearly explain the key terms and what they mean. For instance, if a buyer is uncertain about a certain clause related to penalties for late payments, the estate agent must either explain it in full or direct the buyer to a legal professional who can clarify it. Okay, so this also means maybe in case of a candidate property practitioner who is still not able or capable or allowed to go through an offer to purchase alone with a buyer, then you obviously contact either your mentor or your principal so that they can sit with the buyer and with you and then explain each and every clause to the prospective purchaser. And if there's any questions, that mentor or principal of the estate agency will be able to answer all the questions of the purchaser. Okay, so Regulation 34.5.2, an estate agent shall, if he knows that an offer submitted by him as an estate agent to any party has been accepted or has not been accepted, forthwith notify the offerer of such fact. So, for example, if a seller accepts an offer on a property, the estate agent must promptly inform the buyer or the purchaser of the acceptance of that offer. For instance, as soon as the seller then agrees to the terms, the agent must notify the buyer without any delay. Okay, so that also just helps to speed up the process. If an offer to purchase OTP was signed by the purchaser and the seller has now also accepted that offer and signed it, you may now phone the purchaser to say, "Hello, Mr. Purchaser, your offer has been accepted and signed by the seller. We are going to send out correspondence now and send you a copy of that OTP as well. Remember, once the OTP has been signed, the purchaser must also receive a copy thereof, so that they can have a copy of what document they signed, so that they can have a copy of those terms and conditions, the mandatory property declaration form, and so on. And in some cases, maybe information about if there is any body corporates involved, homeowners associations, meter reading companies, if it is a prepaid company, who regulates the electricity in the house, etc. So all of that information needs to be sent to the purchaser, and as I said, a copy of the OTP and a copy of that property declaration document that was signed. Always remember, when you do sign an OTP, the purchaser then also must sign your that mandatory property declaration document with your OTP. Your OTP will not be valid if that property declaration document was not given to the purchaser. All the defects and errors and faults and whatever the case may be on the property was not disclosed and discussed with the purchaser, and the document was not signed together with your OTP, that offer can be invalid. At the end of the day, when those people, when the property registers, the purchasers can say, but listen, this whole agreement was null and void and was not valid because the property declaration document was never given to me, all the defects was not discussed with me, and I never signed the property disclosure, that mandatory disclosure document, when I signed the offer to purchase. And yeah, then the deal can be cancelled and you will be held responsible as an estate agent. So the number one document when signing your offer to purchase with your seller and buyer is your mandatory property declaration form. That's your number one document when you go to your listing, when you list your property. That one, and obviously your permission to market or your sole or exclusive mandate. Your mandate must be signed, number one, to give you permission to market this property. And number two, in actual fact, the most important document is your property disclosure document. That document must be signed. Each and every client that you take out to that specific listing must be shown that document, or you must at least discuss all those issues with the clients that walk through the property. And if they are interested in buying the property and making an offer, when they sign the OTP, again, go through that document, each and every step from point number 1 until point number 100, go through the document, inform them of that snag list, all the issues, the maintenance problems, the defects, etc., so that they know, and so that you can be covered by that when they sign the OTP together with the property declaration form. That's the most important document. Your sale can be cancelled because of that document, and the deal can fall through, and clients can be sued, sellers can be sued, estate agents can be sued, your commission could be paid back to the sellers, etc. So that document is really, really important. It's your number one document that you must have signed by your seller, is your disclosure document and your mandate. All right, together with your OTP. Okay, so then I just want to make sure that we have covered this following section 34.5.2. If he knows that an offer submitted by him as an estate agent to any party has been accepted, then the client must be notified. All right, so if we go to the next section, without undue delay, furnish every contracting party, as I said, with a copy of the agreement of sale or the lease agreement, option or mandate with which he is concerned as an estate agent, provided that the foregoing shall also apply in respect of an offer to purchase or lease if the offerer specifically requests a copy thereof. So again, after a contract has been signed, the estate agent must provide both the buyer and the seller with a copy of the agreement. For instance, if a buyer requests a copy of their signed offer to purchase, the agent must ensure that they receive it as quickly as possible without any unnecessary delays. But don't even wait for them to request it from you. Do your work, comply with your duties and your responsibilities as an estate agent. The moment that you send that signed offer to purchase off to the attorney's offices and to your principal's offices, then you also send a copy of that OTP to your clients as well, your seller and your buyer. So your seller and your buyer must be copied in, or you can send it separately, obviously for POPI compliance, so that you don't share each other's emails when sending this out to the clients. Okay, so on page 12, the next section will be remuneration. Regulation 34.6, no estate agent shall stipulate for, demand or receive directly or indirectly any remuneration, commission, benefit or gain arising from or connected with any completed, pending or proposed contract of sale or lease, which is subject to a suspensive condition until such time as that condition has been fulfilled. For example, if a sale contract includes a suspensive condition, such as the buyer needing to secure finance, a bond, they need to apply for a bond, the estate agent cannot demand or receive commission until that condition is fulfilled. For example, if the sale depends on the buyer getting a mortgage loan, the agent must wait until the mortgage is approved before receiving commission. But commission is usually paid out by the attorneys only on registration of the transaction, because then we know nothing else can go wrong, the deal cannot be cancelled, your commission will be saved when it is then paid out. There is some companies that do offer advances on commissions, meaning sometimes if the suspensive conditions are already fulfilled, you can apply to receive your commission from those companies, and then you pay a certain percentage fee to them, and then they pay you your commission, and once you receive your commission, you can pay back whatever you owe to that company plus the interest. But it's always the safest option to wait until the transaction has then registered with the deeds office. You know that the transaction is 100% finalized, and then you get or obtain your commission. Then 34.6.1.2, a suspensive, no agent shall, a resolutive condition during the time that the transaction may fall away as a result of the operation of the said resolutive condition. This just means if a sale is subject to a resolutive condition, meaning such a property needing to pass a certain inspection, the agent cannot collect their commission while there is a risk that the deal could be cancelled. For example, if the sale could be avoided due to non-compliance with maybe zoning laws, or the agent must wait for the inspection to be resolved before asking for payment, etc. So that means if there's any suspensive conditions or resolutive conditions on the contract that must be fulfilled first, you cannot ask for your commission or insist on your commission being paid out until those conditions have been met and is finalized at the end of the day. Then we go to section 34 or regulation 34.6.2. No agent shall convey to his client or any other party to a completed or proposed transaction in which he acted or acts as an estate agent that he is precluded by law from charging less than a particular commission or fee, or that such commission or fee is prescribed by law, the authority or any institution or association of estate agents or any other body. For example, an estate agent cannot falsely claim that their commission is fixed by law or any governing body to justify charging a higher fee. For example, if a client asks for a lower commission rate, the agent cannot say that they are legally prohibited from offering a discount unless it is indeed true to do so. So, my recommendation when it comes to commission fees, and maybe the client asking for a reduced commission fee, then it's something that you will have to go and you will sit and do a calculation with the client and say, okay, if you do come down with your price with a certain percentage, then I will work out what that percentage of lowering was on your house price. Say if that came down to a 0.3% in monetary value, you can then calculate in monetary value if your commission would have been, say, 100,000 Rand, and you say minus 0.3%, it comes down to a certain monetary amount, and you calculate that back to a certain percentage. You can say, okay, well, I will lower my commission from a 6% to maybe a 5.7% or a 5.5% rate. Don't always just drop down with a percent or two in commission rate. In another session, I will talk about that and show you the calculations that you can do so that you can actually, at the end of the day, walk away with a little bit more commission in your pocket, even though you have reduced your commission with a certain percentage. So, but you can never tell a client, listen, legislation says I cannot go below 4%. Rather take some commission than walking away with 0 Rand in your pocket. But at the, calculate the amounts and discuss it with your clients, and then come to a conclusion where both of you agree on a certain commission percentage, or maybe even a certain commission amount on your house. All right, but you know, some of the agencies says, listen, you guys must also remember it costs a lot of money to run the portals, to run the website of the agency, to collect data information from the platforms where we pull all the valuations from and obtain the telephone numbers from. To advertise on platforms like Property24 or Private Property, it costs a lot of money. And on each and every click that a customer or a potential client then clicks on that specific advertisement, it costs the agency money at the end of the day to rent an office or to rent equipment or to employ some administrative staff. All of that comes down to the agency having to spend a lot of money, sometimes thousands of rands per month, without even having one sale coming in from the estate agents. So a lot of agencies will say, listen, we cannot accept any mandates lower than 4%, or if they can even go lower than that and say 3%, we cannot under any circumstances accept any commission mandates or mandates where the commission is below 3%, because we will just not cover all our basics. We will not be able to cover the advertisement costs, the portal costs, the website costs, the staff in the office, etc. So as a rule in our agency, we recommend that 4% is the lowest commission rate that we can afford. If you do need to go lower than that, please speak to your director or principal at the agency and calculate what the commission would be. And then you can calculate if that would still be viable for you to actually go ahead with that property. If it's a very high valued property, yeah, then you guys can always consider a lower commission amount if the seller says, listen, I am only giving 3% and that's it. But at the end of the day, maybe it's a 5 or 6 million rand listing. So a 3% on that listing would still be viable. If it is sold, it would still bring enough commission for you as the agent and also for the agency to cover all the costs and also make a little bit of profit from that sale as well. So at the end of the day, remember, an agency is still a business. There's still money that needs to be made, but never tell a client it's legislation prohibiting you from accepting lower commission. You can explain to the client, sir, you must remember, we do not advertise for free on these portals. It does cost a lot of money. Every time a client clicks on your listing and wants to view it and wants to see our phone numbers, it costs us money. In order to run our website, it costs us money. In order for us to give you this valuation and print this out and obtain this information from the deeds office, it costs us money. So unfortunately, we cannot afford as an agency to lower the commission lower than a certain amount of percentage. So you would be shocked to find that there's a lot of clients and sellers out there that never knew that you had to pay for Property24 advertisements. They never knew that you actually do have to pay for those evaluation reports that you bring to them when you show them this is your property information and this is the valuation, this is the market analysis, etc. They don't actually realize, listen, this is costing the agency money. Just to have your logo, your agency logo displayed on the Property24 portal, it costs you money to do that. And when I have explained that as an agent to my clients, to my sellers, they say, wow, I actually never thought about it that way and I never knew that you guys need to pay for it even if the property doesn't sell. Then I say, yeah, so those are the costs: office costs, rent costs, admin staff in the office costs, advertising on these portals, giving you that valuation, etc. It does cost a lot of money. So at the end of the day, I'm actually pushing a couple of £1,000 into your listing. And then because we are maybe advertising this on YouTube and on Instagram and on all the social media platforms, and we're boosting the advert on Facebook and we're paying for those adverts, it's also costing us money. So we cannot unfortunately go below a certain amount of percentage, because remember, we also need to pay tax on this amount. It's not maybe that rounded figure that you see, 100,000 Rand commission in my pocket as an agent. Those costs must be deducted from that commission. Tax must be paid on that commission. Principal fees must be paid on the commission, etc. So you can explain that breakdown to the clients. Don't be shy to do that. I have done that in the past, and then I see, you know what, the clients now really actually understand. For the first time, they actually now know that it does cost you money to actually advertise on all these platforms, and it costs you money to obtain information in order to market those properties. And even the marketing on social media platforms, they think maybe platforms like Facebook is for free. Yes, it is. But if you choose to maybe do boosting of those adverts, it does cost you money. So rather explain that to the client so that they see, listen, this agent doesn't just walk into my home and list it, listing the property on the property portals, and then, earns or claims a very high commission. At the end of the day, that's your professional fee. We do professional, ethical, and honest work, and that is your professional fee for rendering a professional service, and it does cost you money. So rather explain that to the clients. That's what I have always done. Okay, so moving on. Introduce a prospective purchaser or lessee to any immovable property, or to the seller or lessor thereof, if he knows or has reason to believe that such person has already been introduced to such property or the seller or lessor thereof by another estate agent, and that there is likely that his client may have to pay commission to such other estate agent or to more than one estate agent should the sale or lease be concluded through his intervention. So this means if an estate agent knows that other agents has already introduced a buyer to a property, that specific buyer that you are also now busy working with, they must avoid introducing that same buyer again to prevent the seller from paying double commission. For instance, if a potential buyer contacts multiple agents, the second agent must verify if the buyer has already been shown the property to avoid commission conflicts. So how would I know this? You would know this by asking the client, by asking the buyer, especially if you know that you are 2 or 3 or 4 or 10 agents on a specific listing. You ask the client, Mr. Buyer or Mr. Potential Buyer, we are a lot of agents on the property. Just tell me, are you now contacting me first? Am I your first contact, and are you going to view this property through me for the first time? I just want to clarify that with you, and then they can answer you yes or no, or say, no, I've seen it with that other agent, or my wife has seen it with another agent, but I want to see it through you. So it's going to cause conflict of interest. It's going to cause a fight, and it's going to cause the case maybe having to go to court because the other agency will say, but listen, I've already brought the wife of the person that you showed, and the wife said, yes, we are going to sign the OTP. I just want my husband to quickly view the property as well. So the first agent, Agent A, would be the effective cause of the sale because the property was already shown. So please ask those questions if you are more than one agency on that listing, to make sure to avoid this. And again, if you then ignore that and you do take, say, the husband out to that listing because the wife already saw it, now you're taking the husband out, and the husband now signs that offer to purchase with you. And the other agent says, listen, Mr. Seller, I also showed this client this property, and they said that they would sign it with me. On confirmation of the husband, they would have signed the OTP with me. So I was the effective cause of sale, so I'm also claiming my 100,000 Rand commission. So again, if we go way back to the beginning, is that in the best interest of the client by paying double commission? No, it is not. So if you knew that these people, these buyers already viewed this property with the other agent, what is the right thing to do? What is the ethical and honest thing to do? that is in the best interest of the client. It is to rather tell that person, maybe that husband, to say, listen sir, your wife already saw this property with agency A. Please contact agency A so that you can go and view the property with them, as your wife has already expressed the interest of signing the OTP with agency A. If I take you out, the seller will have to pay double commission to both of us, and that's not in the interest of the client. I'm rather acting in the interest of the client, acting honestly, acting ethically, and then refrain from taking out that client. So that's what is meant by this clause and the conflict of interest and double commission payments. Okay. So the next one is include or cause to be included or accept the benefit of any clause in a mandate or in a contract of sale of lease of immovable property, providing for payment to him by the seller or lessor of immovable property of any remuneration, commission, benefit or gain arising from or connected with a contract of sale or lease, regardless whether the purchaser or lessee is financially able to fulfill his obligations in terms of the said contract. So here, whether the purchaser or the lessee is financially able to fulfill his obligations in terms of the said contract. So here again, as a estate agent, you cannot include a clause that guarantees their commission even if the buyer or lessee cannot afford to complete the deal. For instance, if a buyer defaults on a sale because they cannot secure financing, the agent cannot claim commission based on a clause in the contract. That clause would be null and void. That clause would be unethical and dishonest to include such a clause in your contract and to let your seller sign a clause like that in your OTP. Rather conduct ethical business. If your purchaser cannot afford the property or cannot obtain finance, then you move on and you proceed with marketing the property. That's why it's so important when we get to this specific regulation and we talk about finance obligations. Rather work with your allocated bond originator to establish before you actually take this person out to the property or when you do sign the OTP. Ask your purchaser, or just before you sign the OTP, ask your purchaser, did you do a pre-approval or a pre-qualification with a bond originator? If they say no, you inform them, I will notify my bond originator to contact you immediately so that we can do a pre-approval on this offer to purchase. You can do it while they sign the offer to purchase, take it to the client, the seller to sign, but before you send it off to the attorneys, make sure that you at least have a pre-approval in place for that client, because then you know that this deal will go through or it will fall through. That's very important. So always ask your client, what is your source of funds? How are you going to purchase this property? Are you going to purchase it through a bond? Are you going to purchase this cash? Where is that cash coming from? Is it actual cash in your bank account? Or is it a road accident fund claim that's going to take 3 years to pay out? So confirm what is the source of income or the source of funds. How is this person going to purchase this property? If this is again a second property that these people are buying, remember that they would have to have some sort of deposit to put down on their second purchase. They will maybe obtain 100% loan for the value of the property to buy for 2 million rand. But remember, there's transfer fees and there's bond fees as well. So transfer fees must be paid above any property purchase over 1.1 million. Then transfer duty will have to be paid on that as well. Your transfer fees will have to be paid with the attorneys who transfers this transaction, and then also with the bond attorneys that works with the bond. So there's 3 kinds of fees that has to be paid on the purchase of this property. So make sure, ask your client, Mr. Buyer, the transfer fees will be 200,000 Rand or 150,000 Rand, together with the bond fees and the transfer duty and so on. Do you have 150,000 Rand available in your bank account to do or to make those, to pay those fees over to the attorneys? Yes, they have it, or no, they don't. And then if they don't have that money or any other means to get that money, you must inform them, remember, this is your second or third or fourth property. It's not your first property that you are buying. So it means that you will have to pay those fees out of your own pocket. You won't be able to obtain a finance loan, a bond, a mortgage bond from the bank to cover all your transfer fees, bond fees, transfer duty, all those things as well, because this is not your first purchase. And even if it's first-time buyers, it's also not a given that those first-time buyers will obtain, say, 105% or 108 or 109% bond that will cover their bond fees, transfer duty, and things like that. It's not a given to say that they will receive all those fees, included in the bond that they will obtain. So make sure that you discuss that with your client. Ask them, how are you going to pay? Cash, bond? Do you have the fees in your bank account readily available to pay those fees over to the attorneys? And then we will have to apply for your finance. So do that prior. I usually ask the clients before taking them out to a listing. Then I ask them, how are you going to pay? Do you have a pre-approval? No. Okay, let my bond originator give you a ring. It's a obligation free and a total free service from the bond originator, and they will then apply to all the major banks to see where they can get a bond for you at the best interest rate. And that's a total free service. Also tell your clients, if they went on to the websites themselves and submitted on those calculators, I can qualify for a 2 million Rand bond by just inserting their salary and some expenses. It's not the way it works. There's a lot of things behind the scene that needs to happen, credit checks, all of those things, how they paid and handled their credit in the last couple of years. Sometimes, is there any unpaid counts that they skip some sort of payment, a credit card payment or a car payment or cell phone payment or something, a clothing payment, anything, and that will affect their application process and their approval process of the bond. So do not waste your own time, your own petrol, your own money, taking out clients who are just not approved and who refuse to do a pre-approval beforehand. If there is a lot of agents on the property, yeah, well, then you can take a chance and take those people out, but make sure you do a pre-approval and inform your clients, please, can we do a pre-approval for you? It will help you and will just speed up the process as well, because there is a lot of agents on this property. The one whose bank approval is approved first will then receive the winning bid of the OTPs that is going into the seller. Usually that also motivates them to maybe go and do a pre-approval as soon as possible, so that when they do sign the OTP, everything can be submitted to the attorneys and to the banks ASAP. Okay, so the next regulation we can have a look at is 34.6.6. Include or cause to be included or accept the benefit of any clause in a contract of sale of immovable property negotiated by him, providing for payment to the seller prior to registration of transfer of the property in the purchaser's name, of any portion of the purchase price entrusted to the estate agent by the purchaser, provided that the aforegoing shall not apply if good cause exists, the purchaser has prior to his signature of the contract in question consented in writing in a document executed independently of the said contract to such payment, and such document contains an explanation of the implications and financial risk of such payment for the purchaser, and such document is signed by both the seller and the purchaser and the estate agent in question. The example is the following. if there is a request to pay part of the purchase price to the seller before the transfer of ownership, the estate agent must ensure the buyer agrees in writing to such an arrangement. For instance, if the seller asks for an advance payment, the agent must get a separate signed agreement explaining the risks involved in confirming consent from both parties. But this clause is usually done, or regulation is usually done by the attorneys. So rather, if someone makes such a request, I would not, in my personal opinion, do something like this. In practice, there's always something that maybe happens, and there's repercussions, and there's just red flags surrounding this specific regulation. But if the parties do agree to this, then the attorneys dealing with the transaction should draft such an agreement and ask the parties to go into their offices and sign the agreement, and then that agreement will be attached to the OTP so that there's something in writing. Okay, then the next regulation, 34.6.7, shall not operate a trust account other than in compliance with the Act, and these regulations mean excuse me. So an estate agent must comply with legal requirements when handling a trust account. For instance, if the agent is holding deposits in trust for property transactions, they must manage the funds according to regulatory guidelines and ensure accurate accounting. So as I said previously, the only money to be held in the agency's trust account is if you deal with rentals, with lease agreements, and there's deposits that needs to be made to the trust account of the agency. Any other sale deposits on that purchase, that OTP that offered to purchase, sale agreements and so on, all those deposits and things like that must be transferred or paid into the attorney's trust account. That is the safest way of doing it. My specific offer to purchase also stipulates it that no agent may receive any deposits to their own private bank accounts. It either must go to the agency's trust account if it's a lease agreement. Alternatively, if it's a sale agreement, then the money will be deposited directly into the attorney's trust account. That is the safest option available.